Hello and welcome to Tax Matters. I'm Chiamaka Ohauchi. Today's episode is a full session of our tax law clinic, also known as Taxpayers Education. Well, that's what we do on Tax Matters on every episode. In continuation of the Businessman's Guide to Taxation, we began a combo series featuring a tax professional in private practice and a tax collector plying his trade at the FIRS. The aim is to guide the businessman or woman on what it takes to fulfill his or her company's tax obligations, especially with respect to the all-important company's income tax and, of course, associated taxes that are filed and paid along with CIT. A few episodes ago, the private tax practitioner in the person of Mr. Bolaji Aliyu was brought to your living room. In continuation of the series, we are moving over to the tax man, the one that pores over the returns filed on your behalf by the tax practitioner. Mr. Sadiq Abubakar Mohammed is the State Coordinator, Lagos Mainland East at the FIRS. Mr. Mohammed, thank you for joining us on Tax Matters.
Thank you very much, Amaka, for having me today.
You're welcome, sir.
Thank you.
So we are looking at the tax obligations of a company or a company owner, if you like. And in doing this, we've spoken to a tax advisor in the person of Mr. Bolaji Aliyu. You have heard the responses to our questions from Mr. Aliyu. What is your reaction?
Well, good morning once again, Amaka. And yes, I've had an explanation by Mr. Aliyu in respect of the tax obligation of an average taxpayer. And I think I'm impressed because Mr. Aliyu has gone a long way to explain the nitty-gritty of how they come about preparing the accounts of an average company in Nigeria. And he has done a very lengthy explanation on this. He has told us the basis of the financial accounting of a company. He has also explained to us the content, what the contents of an average financial statement should be as per the provision of IFRS. He has also gone a long way to also let us know that there are likely to be two situations when preparing an account for a company. There are companies that have their full financial records that easily allows an auditor or an accountant to pick information from those documents and easily prepare a financial statement for the company. But there are also situations where documents are either not available or they are incomplete, and we call them incomplete records. And he has told us where you have such information or lack of information or incomplete information, the accountant will normally resort to putting one or two documents together, maybe the bank statement, a little of documents here and there, to enable him put up an average financial statement for a company. To that extent, I think the explanation is very clear and complete. As far as the FRS is concerned, our own role comes after the accountant has finished his own role. The accountant collects the records, prepares the accounts, audits the accounts. It is only after the account has been audited that they now come to FRS in form of tax returns submitted by the company or the taxpayer, and that's when the FRS comes in, and that's what we call tax returns. This audited account will normally come with other documents, which I'm sure we'll discuss during the course of this program.
Sir, in one of the questions, we asked about what the auditor does when he or she is dealing with a company owner who is not, don't let us say uneducated, but maybe unorganized and does not know what to do. In this case, the auditor puts together the books as it were. How do you at the FRS react to this kind of situation? That is, do you always insist on evidence of transaction? We ask this because we know that we know for a fact that people go on business trips and they forget their ticket stubs and they buy petrol and they do not collect their receipts, and so on and so on. So how does the FRS react when the company owner cannot provide receipts for everything?
Okay. Under normal circumstances, we are supposed to rely on the records of financial transaction of a company. But like you mentioned, this is visible in most cases only with the big companies. In respect of the big companies and the multinational companies, they always have a way of keeping good records. They always have a way of keeping complete records. So normally when we request for these records, we almost often get complete records for whatever we want to check. But when we come to the SMEs, that is the small and medium enterprises, companies, you discover that we hardly get enough information to enable us to do our work. And if we say we want to rely on the physical existence of these documents, it means our work will not be complete. And because of that, we have over the years developed a lot of strategies that we use in order to arrive at reasonable information about the financial transaction of any company, especially those small and medium enterprises. And over the years, some of the methodologies we use cut across so many fields. For instance, we normally resort to industry average. Because wherever you are operating as a company, there are other companies that are likely operating just like you are operating. So we normally do that comparison and come up with some kind of averages that will enable us at least determine to a reasonable extent whether or not what you are telling us is true and fair. Apart from that, we also use what we call accounting ratios. These accounting ratios can be gross profit ratio, it can be net profit ratio, it can be tax to turnover ratio, tax to gross profit ratio, so many of them. And when we do this comparison, we get these ratios, it will normally give us an idea whether or not the company is telling us true and fair position of his dealings with his customers. This gives us an idea whether to go deeper than what we are seeing as provided by the taxpayer, or what he has provided is enough for us to work with. Another principle we rely on is what the law provides for us. That is Section 24 of the Company Income Tax. Specifically allows us, Section 1 of that Section 24, come up with a principle. It's a section that deals with allowable deductions. Whatever deduction is made by a company in arriving at a profit for a particular period, that is the cost and the expenses that they incur in arriving at a profit, must be subjected to that principle. And that principle is what we call WREN. It is W-R-E-N. The law provides that whatever expenses is allowable should normally pass through the test of these four letters. The W stands for wholly, that the expenses must be wholly incurred by the company. I'll give you an example. If a company is resident in a particular office, a particular building, the building belongs to the owner of the company, and the building is divided into three. One of the parts is used by his wife, maybe for cosmetic, sales of cosmetic and whatever. Maybe the other half is used by his brother as a pharmacy. If at the end of the year you bring us an account and you say you have expended 500,000 for lighting, of course we know that if the lighting belongs to the whole building, it's not that 500,000 that is wholly incurred by the company. Part of that lighting was expended by the pharmacy and the shop of the wife. So we'll normally do an average and see how do we arrive at what percentage of that lighting belongs to the. So it means it's not wholly incurred by the company in producing that profit. Then we have the R. The R represents reasonable. Whatever expenses you give us should be reasonable. If it is not reasonable, definitely FRS will not allow all of it. We'll just give you a percentage of it. And then we have the exclusiveness. The expense has to be exclusive to the business. Anything outside that, we don't usually agree with. It's either wholly disallowed or partly disallowed. Then we also have the necessity, that is necessary. That expense you say you incur, is it even necessary for you to produce that profit for that particular year of assessment. If we consider it not necessary, then definitely we will not allow it. So the general principle is that there are expenses and costs that are allowed in accounting, but that are not allowed as far as taxation is concerned. So I think those are the principles we have been following to arrive at some reasonable information about a company.
Thank you very much, sir. In response to the first question, when you were making general comment on based on Mr. Aliyu's responses to our questions, you made mention that in filing for companies' income tax, the financial statement is accompanied by other documents. Please share with us those documents.
Like I said, the financial statement, which is the audited account that comes to FRS after it has been produced and audited by the accountant, is just one of the many documents that are supposed to form the documents for tax returns. Section 55 again of the company income tax gives us a breakdown of what an average tax return should be. We have already mentioned the audited accounts. The audited account, of course, is a principal document for us. But apart from the audited accounts, we also have the tax computation. We also have the capital allowances computation for the particular year of assessment for which we are working on. We also have a true and correct statement giving us a breakdown of all the sources of profit. Sorry, the profit made from all sources of income for that company. If you have 3, 4, 5 sources, that statement will state all the sources or all the profit you made from these particular sources. That is a very necessary document for us. We also have a self-assessment form that must be attested by the company. That self-assessment form, the law specifically allows FRS to produce it and give it out to the taxpayers to fill. And we already have a standard form for both our company income tax and the education tax, as it may be. The other document that should accompany your returns, obviously, of course, is the evidence of payment. You must show us, because we operate a self-assessment system, you must show us that you have paid either the full amount of tax due or part of the tax due as allowed by the law, because the taxpayer is also allowed to pay in installment basis. So I think those are the few documents that a taxpayer is supposed to produce for the tax office. The Section 55 is clear. Every company in Nigeria, whether it is exempted from incorporation in the first place, whether it is liable to pay tax for that year, whether FRS demand for these returns or not, every company is supposed to file at least one return every year to FRS. In addition to that particular statutory returns filing, FRS also has a right to demand for other returns at any point in time, because Section 26 and 27 of FRS Establishment Act give FRS the power to request and demand for additional records, additional information from the taxpayer whenever it deems fit that will enable us to do our job.
Interesting. Now, with regards to these documents that are being submitted, now I would like to know if the FRS go further to do some interrogation or examination after the auditor has appended his signature and the directors of the company when they have signed.
Yes, we do a lot of checks. Under normal circumstances, the obligation, the law, because we operate a self-assessment system like I just said, the law gives that obligation to the taxpayer to come and tell the tax authority, this is the extent of my financial transaction for a particular year, and this is what I come up with as my profits, and this is what I come up with as my tax due. That is the normal thing. But of course, at the point he's submitting those accounts and self-assessment and other tax returns documents, we accept them on the face of them, or on the face of it as they are. We put them in our records, but in due course, of course, we do a lot of check-ins. And in FRS, we have about 3 stages that we go through in checking the completeness or authenticity of records submitted by taxpayers as tax returns. The first stage we go through is the desk review. The desk review is done at the tax office where the company's tax records are kept. We go through the documents submitted by the taxpayer. We do a little bit of checks here and there just to confirm that whatever the taxpayer has given us is almost the authentic things that we are supposed to get. Furthermore, we do what we call field audits. Our staff go out to the companies to verify on a deeper level than the desk review, to the extent of which information given to us by the taxpayer is correct. Then the last stage we have is the tax investigation stage. There we have the normal tax investigation. We also have the criminal investigation. These are very high-level investigation stages that IFRS resort to when it is necessary. In the process of carrying out these three functions, we resort a lot to IT, that's information technology. Because over the years, since the inception, so since the new chairman came in 2000, we have emphasized so seriously about data. So much so that most of our job now is governed by data. We do a lot of check, we get a lot of information. The chairman came with a kind of reform agenda, and this reform agenda are about 4. One of the 4 reform agendas of the executive chairman, Mohammed Nami, is that he wants FRS in the long run to be a data-centric organization. We are supposed to keep good and enough data that will enable us come up with a very good information about the taxpayer, and also enable the government to use that data to do a lot of planning. And over the years, we have done a lot of progress on this respect. Little wonder you will see that last week, the executive chairman was one of the public servants that was able to get an award, a public service award for excellence in fiscal reform. That is as a result of the progress we have made in respect of the use of data to arrive at a lot of information that enable us raise a lot of taxes that would not have been collected without this data.
That is very commendable. Now, with regards to filing of company's income tax, and when the tax consultant files on behalf of a company owner, now must the FRS take these steps, these 3 steps you mentioned, must it be carried out on all the files that have been, documents have been filed?
Yes, normally we are supposed to carry it out on all the files. But you know, as it is, there's always this principle of Pareto principle, 20/80. We will normally concentrate on our big taxpayers. The smaller ones, maybe we do a lot of desk review for them. But for the big taxpayers, we always normally resort to tax audits and tax investigation. The tax investigation will normally come if there is any trigger, either from the desk review or from the audit. In the course of carrying out audit, if you see something that requires a deeper examination of those accounts and records, you will normally refer those cases to tax investigation, but because their work is normally much deeper than the tax audit and tax review. So there are circumstances that warrant that we go through the 3 processes, and there are circumstances that warrant we go through only 1 and we are okay. Once we are satisfied that you have done a good job on your records and accounts, I think we leave you alone.
So what can give rise to tax investigation?
Tax investigation, when we discover, for instance, that the records you are giving us, there are some hidden information that ordinarily an audit process will not be able to bring out. But we have inklings, either information from somewhere or through the work we are doing, we discover those kind of situations. We will normally resort to tax investigation.
Thank you very much, sir. Now, how do you advise a company owner to go about fulfilling his or her tax obligations? Okay.
This is a job we have been doing for a long time. It's part and parcel of our job. Like I mentioned in the earlier the executive chairman came with some policies and agendas. One of them, apart from the data-centric is also customer-centric. The chairman insisted when he came that he wants FIRS in the long run to be an organization where the customer is actually a king. So we give a lot of preference to the customer, to the taxpayer, whether big or small. In doing that, we just want the taxpayer to fulfill the obligation given to it by the law. Payment of taxes, we know, is a civic responsibility that every reasonable person is supposed to do as part of his civic responsibility. In doing this, of course, there are situations where the taxpayers are either ignorant or are not too educated on what they are supposed to do. So because of that, we do a lot of taxpayer education. Since the chairman, Mohammed Nami, took over FIRS, we have taken this to a higher level. We have even created a lot of departments that are taxpayer-related departments. We have a taxpayer services department. It's a full-fledged department. We have also created for the first time a Servicom department. It's also a full-fledged department headed by a director. We also have what we call the change management department. It's also a full-fledged department. All these are supposed to walk around and see and ensure that enough information is given to the taxpayer, enough taxpayer education is carried out to ensure that the taxpayer knows his obligation to the tax authority. So in the long run, there will be no cause for complaint that we are ignorant. That's why we do what we did. We also have a call center that was launched just last year by the chairman, and it has been very effective. People can call from anywhere to complain or to give information about taxes or tax payables. So in fulfilling this, we advise that the taxpayer, first of all, immediately you register your company or you incorporate your company with the Corporate Affairs Commission. The first thing you must think about is, how do I begin to keep my records? Because those are the primary things, the primary place we start from. If you don't keep your records, your accounts cannot be prepared very well. It cannot be audited. It cannot be part of our tax returns. But when these things are done, keep your records, ensure whatever you do, transaction, financial, no matter how small, find somewhere, even if it's an exercise book, keep a record somewhere. So that at the end of the year, when the auditor comes or when the accountant comes, he'll be able to easily prepare an account for you that will be audited and brought to FRS for effectiveness. I will also advise that the taxpayer is supposed to also come to the tax office after registering with incorporating with the Corporate Affairs Commission. You get your tax identification number, which is TIN. Once you have that TIN, you are now an independent company. You pay your taxes from everywhere, anywhere you are, whether in Nigeria or outside Nigeria, using our new Tax Pro Max platform. You can also file your accounts from anywhere in Nigeria or outside Nigeria in the comfort of your office or home. You're also supposed to pay your taxes as at when due, as a taxpayer, a responsible taxpayer. You're also supposed to file your accounts as at when due. I think these are the little advices we will normally resort to giving to taxpayers anytime we get opportunity to speak to them.
Thank you very much, Mr. Mohammed. We really appreciate your time.
You're welcome, Amaka.
I'm a very busy man. My business involves a lot of traveling and I interface with lots and lots of people and organizations. Tax compliance used to be a big drag on my business. It was time consuming and very costly. But now, no more. Introducing the FIRS Tax Pro Max, the truly fully end-to-end tax administration solution for companies' income tax, value-added tax, petroleum profits tax, and all other tax types. For fast, efficient, and convenient end-to-end tax experience, log on to www.taxpromax.firs.gov.ng. Tax Pro Max has turned things around for me. It is fast, user-friendly, and cost-effective. FIRS, making tax administration as easy as ABC.
There you are. All you need as a business owner to fulfill your tax obligations, especially when it comes to federally collected taxes, that is, those taxes collected from limited liability companies by the Federal Inland Revenue Service. We are sure you had fun while being educated. We thank Mr. Mohammed on your behalf as we enjoin you to join us on this same station, same day of the week and same time of the day next week. Remember, ain't nothing wrong with the ember months. Don't overspeed. Use seatbelt and don't drink when you drive. Thank you for watching.